All right, good morning, everybody. Markets are basically flat. Europe's doing a little. Small caps are doing better. Going to get a little bit of data, but mostly today is going to be the VIX expiration. And if you looked at the spot gamma report, their focus was mainly on the idea that VIX has been suppressing the moves that we've been seeing on a day-to-day basis. Now, just kind of think back over, say, the last week and a half, and the type of moves that we've seen. And then, just kind of ask yourself, has it felt very suppressed? We've made reasonably decent moves. Those were reasonably decent moves with this suppression. Imagine with that suppression gone. So we're going to see the removal of the wet blanket, and then the markets could really begin to expand. Small caps got a significant beat down yesterday, so we're seeing that kind of pop up a little bit this morning. Feels a little bit like a dead cat bounce at this point when you look at the other indexes and you see that the NASDAQ, the Dow, really not doing all that much, but you got small caps up 0.75%. And then we've got, Euro stock 50 down more than 0.5%, and UK 100 up 0.75%. It's a very uncoordinated and a mixed bag of goods this morning. At 8:30, we're going to get a little data. These aren't big events. Export prices, import prices. It's not to say that they're not useful or not valuable. And while they have them as a low impact probability, that doesn't mean they can't move markets. They absolutely can. Tonight, we're going to get data out of Japan, ties in with imports and exports as well. It's more likely that between now and the end of the week, what we're going to get from other nations will be as impactful as anything that we're going to get today. Got a lot of eyes on semiconductors and whether or not they can recover a bit, and that ties right in with Bitcoin. I continue to hear people say, "Screw Bitcoin, I don't care, I'm not interested." I get it. If you're not trading crypto, so what, right? And I'm not telling you got to trade crypto, but you might want to pay attention to what Bitcoin's doing because it directly connects to semiconductors, and NVIDIA is the market. Full stop, end of story. NVIDIA is the market. 5 years ago, we would say, Apple was the market, or, Apple and Microsoft were the market, and things change. So with semiconductors directly connected to Bitcoin, you really do want to pay attention to what Bitcoin's doing. Bitcoin's trying to break out of yesterday's range at the moment. And if we can get that continuation in Bitcoin, we can see semis hold the line and perhaps try to run back again. That takes the rest of the markets with it. On the other hand, Bitcoin does have a habit of making violent moves in either direction. And should it decide to violently reverse like it did yesterday, then we could see the same thing throughout the whole other market. For you day traders, if we got Bitcoin breaking out, then you want to focus on those Bitcoin proxies, Mara, HUT, Hive, Hood, Coin, MSTR, right? That kind of group, because those proxies are a good way to play. And of course, there's all those new Bitcoin ETFs. I don't really care much for their options, but we got those too. So the market's basically flat. We're not even up 0.1% yet. That doesn't put us towards one side or the other, really, with any conviction. We're in the middle of the zone. No edge. If we were close to the upper edge, we'd say, yeah, we're probably going to hit the upper edge. And if we were closer to the lower edge, we'd say, yeah, we're probably going to hit the lower edge. We're not at either one. I do have a failed flag play that I like. You think about it from the idea of what a flag should do, right? You get the post or the flag pole, and then you get the flag itself. And a typical flag is supposed to go lower. So when we call it a failed flag, that means it didn't go lower, right? It didn't turn around and go the other direction. Instead, we're looking for it to form what would be a cup and perhaps a handle on that cup. To get the cup, we would need for the flag to fail. So look at it from the point of view of, well, what do we want to see here? What's our breaking point? I would rather get into these from the lows rather than getting into these from a breakout perspective. But you can use something like the 786 and you can use the halfback. So if we're looking for the flag to fail, we want to get out of this range down here, get out of that 786, work on getting back to the halfback of yesterday, get through that, get through the ADR half, continue the drive, get through the Globex low, then through the RTH open or yesterday's RTH high, and then through yesterday's Globex high, which will get us really close to the full ADR. Level by level, step by step, all the way up. It's absolutely doable that we could do that. The problem is markets are all interconnected. So after that beat down in semiconductors yesterday, if it's not done and we're only getting a dead cat bounce, then we're going to see everything roll over and continue to move to the downside. My semiconductor list, looking at the extended hours, a lot of them are up. There's a few that are down, like Intel, Western Digital, ASML. So, there are a few. And, KLA was really a part of that beatdown. Yeah, I was hoping I'd have a better one. That was really a part of the beatdown yesterday. But ASML was the one that I was really keeping track of. And it's down again this morning, another 3%. This was a big part of why we fell yesterday in the first place with semiconductors. I mean, sure, the news out on NVIDIA yesterday, it wasn't necessarily new news about the Biden administration putting in sale restrictions on specific countries. They've already got 40 different countries on the no sale list. So, adding a few more countries wasn't really shocking news. And that alone wasn't really the issue. So keep your eye on ASML. It's going to be the worst of it if we can start to get back a little bit here. But look at a lot of the other semiconductors, right? They're up, ARM 1.5%, NXPI 1%, ON 1%. Even NVIDIA, up near 0.75%. And without a lot of really big econ, if we don't have non-farm payrolls, we don't have PPI, CPI, then markets are looking for an excuse. They're looking for a reason. They're going to be looking around at what else they can play. And small caps are moving this morning. we have some good ingredients for a potential comeback rally, or more than just a dead cat bounce. But at the moment, this is not a failed flag play until we can get through 786 as just a good starting point. We got to get through that, then the half, level by level, right? Central pivot range is below yesterday's range. It's a really wide range too, which implies that if we break out, the breakout doesn't stick. I mentioned that yesterday, and how if we were to break down yesterday, if we were still inside the previous day's range, that we didn't break out, right? So having a really wide channel yesterday and saying it implies breakouts won't stick. Well, that was still a heck of a move, even if we, ultimately didn't break out and stick below the previous day's low. So it's not overly amazing to say, yeah, see, it was right. Today we get another one, and it could be just as not helpful today, because we could rally all the way back to yesterday's high. And as long as we don't break above it and close above it, then the central pivot was right again. The breakouts likely failed today, and that it doesn't stick. The spot gamma index was at 3 yesterday, which implied that if we broke out, it wouldn't stick. Today it's at 1. It goes from a -4 to a +4. So if we're at a +1, then we're a little closer to the middle than we were yesterday, but we're still in the positive side, which implies if we break out, breakouts won't stick. That will come back in again. Now, those are both the channel and the spot gamma index. They don't move price. They just give us a suggestion of what price could do if it was to break out today. So, don't get too hung up on the idea that, oh, well, we're not supposed to break out and really grow legs, because price can do whatever the heck it wants. And if you haven't figured that out yet, well, buckle up, you will. So the pivot is under yesterday's pivot. The channel is completely outside of yesterday's channel to the downside. That's bearish. Price opened up underneath that pivot. It's also bearish. And we have an MDP today that's a missed daily pivot. Markets generally hit their pivot point, and right now we haven't. So that would imply a bullish bias just to at least get up there into 58 to 75 and hit that pivot point. But then what, right? And that's kind of where we're at. Is this going to be a bit of a dead cat bounce before a continued move lower? Or are we going to be able to reclaim this and go higher? The S&P is in a large rising wedge on the daily. Daily, weekly, either one. And rising wedges very often break to the upside first in like a blow off top. What it's supposed to do is break down. And how far down it goes is from measuring these two levels and projecting it to the downside 50% and then 100%. But it doesn't always do that. A lot of times it will first break out. You get a big blow off top, and then it'll dump. Kind of like the tweezer top that we got yesterday. Now, the S&P has a lot of history of throwing off candle patterns. So this doesn't have to come to fruition. It doesn't have to become this blow off top with a drop down into 5,500 and 5,450. And it wouldn't happen today anyways in one straight shot, right? It would be this breakdown over the next 2 to 3 weeks. The way Spot Gamma had laid it out the other day was first OpEx is going to come off the table, and any price suppression that we've had from that is gone into the weekend. And then that runs us into the elections and then into the end of the year. If the elections aren't contested and drawn out in a huge fight, November is going to be a really big deal. The first week of November, we got FOMC, CPI, PPI, non-farm payrolls, QRA, and the election all piled up in that front part of November. So it's a massive amount of volatility is being pushed in that direction as soon as the OpEx is done today. The point of control on the week is a cap right now. It's also a little bit of a draw. If we can begin that failed flag play, we could run back to 5,900 to 5,911 cog line, right back up into that point of control. Otherwise, breaking yesterday's low is very likely going to take us to 5832 cog line like a magnet. It'll just draw us right to it. Below that, 5,800, solid round number. And I believe Spot Gamma has said risk off under SPX 5,700. And if you line that up, it's not very far away. October 7, the low of October 7, this range right in here, first week of October. So if you turn on the door, yeah, it's a day one open range. And some people use a 3-day, but this one just happens to be the one single day. It would bring us back down into that door. 5692 cog line, 5,700, which would also line us up for that rising wedge failure from a blow off top. Volume's all right. It's sitting at 55. It's not too low, but it's lower than we would want. We had 49 on Monday, so you know it can certainly get lower. 45 on Friday. 55 is not that bad. It's a little low, but we're not seeing it with hedging. Generally, with low volume, it implies they're sitting out and they're waiting on something. And then if we see hedging attached to that, they're sitting out worried, waiting on something. We don't see the hedging this morning. So they're hanging out, waiting for something. And like I mentioned earlier, looking for an excuse, looking for a reason. But they're not doing it with hedges. They're not waiting in fear. Ten-day, 30-minute volume profile. This thing is a mess. 5750 still the point of control, lines up with the TPO. It's starting to form a lowercase b here on the TPO. it's really clean over here. But on the volume profile, it's just an absolute mess. We've got high volume nodes all over the place. And throughout the current week, in the next week, we're going to lose this point of control from down here. It's very likely going to shift up into 5832 area unless we hang out, say, at our current spot over the next day or two, build this volume profile out more at the high volume node 5860 area. I find it hard to believe we're going to be able to stay here in the flag part of this flag pattern, right? Not the pole, but the actual flag part of it. I don't think we can just sit here chilling, waiting, building out this volume. But it is a good representation of GTFO, right? Get out of that box to the upside and you form the cup and handle. Get out of that box to the downside and you have a flag continuing its move to the downside. The intraday profile this morning really kind of highlights how tightly structured everything is, and that unfinished business from where we opened at 6 o'clock last night set that low. We have a VPOC now overhead. It's been a while since we've gotten a new one. Over a month. It's close. I might be off a tick, but it's pretty much there. 58.87. So a break to the upside. We're going to have to work through this volume profiles point of control, 58.87. It's where we paused yesterday and consolidated before they gave up and ran it lower. So while yesterday may have felt like a pretty big move, it really just took us back to Friday's close. And now we have this tweezer pattern on the daily. It's a real simple thing to just lay out a structure, 50% right there. And then you've got your liquidity zone below. $57.50 is the edge of the week's expected move. We're at Friday's close, so we have plenty of room to the downside, and it wouldn't even be considered bearish. It wouldn't change the bullish posture of the broader marketplace. It wouldn't it wouldn't even be a large move, right? It would just be another week. The markets wouldn't even be considered bearish until we can break under this low back here. So if we pull back and we don't match that low or go lower than that low, then the market's not bearish. We've been getting higher highs and higher lows. So until that changes, markets are still considered bullish. But 57.50 is a long ways off. You're looking at, what, 110 points, 116 points. It's quite a move. So as I continue to say, yesterday's move, that wasn't anything. That was nothing. We're still 2.6% above the 10-week. Holding above the 10-week implies that we're still in a bullish bias. The market's still strong and healthy. If it wasn't strong and healthy, we would be at the 10 or under the 10. We didn't move significantly to the downside yesterday because we can see that we're not massively closer to the 10. Now the 10-day, on the other hand, we're closer to that 10-day. We're at a 0.5%, slightly less than yesterday, but we're still above the 10. So you could say we got a little bit ahead of ourselves on the 14th when we got, above 1.5, more than 1.5% above the 10-day. So a little bit of mean reversion or a knee-jerk reaction back the other way. Even though that wasn't overbought, it was reaching the edges of where we tend to pause or pull back. And we got the pullback. Surprise? Not really. So a correction in price rather than a correction in time, we could have just hung out there and the 10 would have got to us eventually. We sped up the process by moving back towards it, getting that reset. From here, even if we go down a little bit lower and get to the 0 line, which means we've reached the 10-day again, it still just means we're in the middle of the basketball court and that we could run either direction, 1.5%. That's not bearish at all. Financials continue to look good. Tech, of course, took that smackdown with semis yesterday. Consumer discretionary is underneath this last pivot from September, and it still hasn't worked its way back out of that yet. So it's just holding the line anyways. They say banks set the tone for the quarter, right? That the banks, they do their earnings first. And if they have a rough earnings, then, generally speaking, everybody else will have a rough earnings. It's maybe just a little bit of a tail's tale, right? What they say about markets aren't always necessarily the truth. But they have started off earnings season really well. We've had that nice expansion in XLF and, in the banking sector and the financials, they're looking good. And there was an article that came out in, I think it was Bloomberg, that talked about the lowered bar on corporate earnings and how a lot of companies could beat this quarter, which implies that they're going to do good too. Just keep in mind, all those companies that were announcing spending money on AI because it was going to improve efficiency and allow them to, sell their product faster, make more money, they've been brutally beaten down if it didn't work out that way. A lot of those companies that spent the money didn't get the results they were wanting to see. Adobe comes to mind. When they announced they were going to lean towards AI, they had a nice explosion on their chart. Stock went up considerably. And then at earnings, they just couldn't justify the spend. And it's been a great example of that beatdown. So sure, the lowered bar means a lot of these companies are going to be able to jump over and say, look, we beat our earnings estimate. Well, when it was that low, sure, easy to jump. Just watch out for the companies that's been spending a lot on AI other than the Mag 7 group, right? They already have stated two parts of that group. Half said, we're not going to stop spending. It's a race and we're not going to come in last. So whatever it takes, we're going to spend it. The other half said, yeah, we're going to slow down now. We don't need to spend 8 billion a quarter. Yeah, that's billion. We don't need to spend 8 billion a quarter anymore. We can slow down to perhaps 3 to 5 billion. Mag 7 group is up this morning. Nat gas is down. Bitcoin miners, China ADRs. So Baba, Baidu, JD, Lee, Neo, XPEV, those guys. Oh, and copper should be up as well. So we got that. Bitcoin, banks, China again, emerging markets, which is China again, bonds. Semiconductors are working on it. They're not there yet. They need to get up another 0.1%. Uranium taking a little bit of a hit this morning too. Crude is down some. It's not quite to our benchmark yet. Need another another 0.1%. Now, China's got this big thing going on at the end of the month, and we could see more out of that China group, those China ADRs, closer to the end of the month. So I wouldn't start getting into positions on those yet. If you're already in them and you're not underwater, then maybe you can hang out. But if you're not in yet, I would be cautious of swinging those. Precious metals, silver, gold miners, small caps, which I mentioned at the open of this, they were up this morning and doing really well. They were almost to an inside breakout already. Solar, that's just an algo print at the moment. We want more than that little dot. VIX, but it's going to go through OpEx, pot stocks, just an algo print. And bonds are up a little bit more. Came back to the year-to-date anchor to VWAP, overshot it. Now it's trying to turn around with this evening star reversal and a daily bar gap. I mean, the gap is closed, but it's nice to have that gap starting things off. That's the turnaround that we were talking about when it was still sitting up here at 97, 98. We were talking about the drop down and then the flip and the run back up. So far, it's doing exactly what it's supposed to. Although I got to say it went a little lower than I expected, but that's about typical anyways. All right, NASDAQ, things that are up in the pre-market, at least 0.5%. We got 23. So, this is where we can say 23% of the NASDAQ 100 is up at least 0.5%. That's not bad. It's not crazy bullish. One of these days, we're going to come in here and it's going to say that, 75 to 85 names in the S&P and the NASDAQ 100 are up at least 0.5%. And on that day, you'll know, oh, it's going to be one of those days. It'll be, one of those rip your face off rally days where we just run all the way, all day into the close, up to 2.5%. One of those days. Today's not one of those days. So you can see the semiconductors that are up this morning. A lot of this is nothing more than, a reflexive move higher after the significant beat down yesterday. From one point of view, we could say that perhaps it's just a dead cat bounce. We'll get on the other side of it later today. and try to determine if it's going to become more than that, or if this is just going to stall out, fall over, and continue the move to the downside. Then we've got some trucking in there, some biotech, department stores. The rest of it's just kind of spread out into different places. Looking at names in the NASDAQ that are down at least 0.5%, two semiconductor names, ASML and Intel, both continuing that move from yesterday. Looking at the S&P, names that are up at least 0.5%. Banks, finance, that's not a surprise. Citigroup, BlackRock, Goldman Sachs, JP Morgan, no surprise there. But we've got Caterpillar and some construction, restaurants, vehicles, drugstore. The rest is just a scatter again. Semiconductors are in there, NVIDIA, AMD, Broadcom, but really it's finance. And when you think about the S&P versus the NASDAQ, that's the one thing you really want to keep in mind. The NASDAQ 100 doesn't have financials in it. The S&P 100 does. So think of one as your finance and consumer discretionary, and the other one as tech and consumer discretionary. It's not that way per se. There's a lot of other stuff in there too. It's just a really easy way to keep it in your mind, right? These boxes are developed by size based on market cap. So you can see the Mag 7 really easy this way and everything else. Facebook is basically flat. Google's got an event today. Amazon basically flat. Apple, Microsoft. So some big moves in Broadcom, NVIDIA. That's more of a dead cat bounce. Tesla's up 0.5%. Cisco 1.8. Let's get the VIX OpEx out of the way. See if we get the failed flag break to the upside. Watch Bitcoin for that inside day breakout rejection. We got the dollar fading down. The 2 years already inside day breakout, but the carry trade testing yesterday's low really looks like it wants to go lower. That very likely is going to take the S&P with it. We'll see, right? If we can turn it around or not. Keep your eye on the clock. We do have some news today. It's just not the big typical kind of events that we would generally focus on. Be careful, be safe. I'll see y'all tomorrow.